One of the big movers overnight was the New Zealand dollar. We've strengthened quite a bit in the last 24 hours, and against the US dollar we're back over 74 cents. So that was a upward movement of nearly 1%. We're back over 73 cents against the Aussie. The Australian dollar was quite well bid in recent days as well, and there's been pretty good volumes going through the markets for that currency as well. Looking further abroad, we've got the usual worries going on. The tensions in the Middle East and North Africa aren't going away. The conflict in Libya is continuing to push oil prices to very high levels, and it's still trading over $100 a barrel for oil. Across the Mediterranean and Europe, those fiscally challenged nations are back in the spotlight. We saw pretty massive jumps in the debt for Greece, Ireland and Portugal overnight. Greece, for example, their bonds are yielding over 12% at the moment, which is an incredibly high rate. And even finance companies in New Zealand didn't have to pay that sort of yield prior to the global financial crisis. So it's a very high yield on a sovereign bond. So the investor concerns there are that the European officials just aren't hammering out a solution quick enough for those fiscally challenged economies. Now that's weighing on share markets. They were fairly weak last night as well in Europe and in the US. In the US itself, the data was a little bit weak. We had the Richmond Fed Index and some housing data out. Both was a little bit soft. But the general feeling is that the US economy is slowly getting better. We had a couple of Fed speakers out last night. They sounded reasonably upbeat. They're a little bit hawkish on inflation. Inflation seems to be getting a lot more airtime these days in some of the Fed speakers, and particularly in Europe. Actually, in UK, we had inflation figures out last night, 4.4% annual inflation. It's a very high rate of inflation for them, given how the economy is spluttering along. And it's certainly fueling speculation that they'll be raising rates in the UK over the coming months. Likewise, across in Europe, speculation is centred on a rate hike from the ECB, European Central Bank, in April. And we had more hawkish speakers from the ECB in recent days. So that's the sort of situation at the moment in those markets. The focus closer to home is on the Japanese situation. It seems that concerns are abating about a full-scale nuclear meltdown, and now the focus is really shifting to what it means for the food supply in Japan. Nuclear reactors exploding are never good news, and the radiation is starting to look like it's contaminating some of the food up there, with higher than acceptable levels of radiation recorded in some milk and some vegetables recently. This is going to be an issue to monitor in the days and months ahead, for sure, for that economy. And for New Zealand, it certainly makes us look like a nice, safe place for growing food these days.